Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look again at the euro currency. Well guys, finally some kind of the continuation or something of that sort. At least we have got this really significant candle to the downside. So anyway, this move has happened. Although we have expected to see it a bit earlier when we even discussed the bread and butter in this area. Also we have thought about the potential bearish stop grabber that could be formed here. But market hasn't given us neither bread and butter sell nor stop grabber pattern, and instead of that has proceeded right to the 50% level on the daily time frame chart. Well, currently the major concern and the major question is the direction. So how treat this action to the downside? Should we treat it as just BC leg of the potential ABCD pattern to the upside? That is in fact the upside risk. I have even marked it as the upside risk. In fact, theoretically that could happen because recall that this action on the weekly time frame is the potential bullish engulfing pattern, and that is just a retracement inside the body of this pattern. So the target of this pattern is the length of the bars. So if you count the length of the engulfing pattern on the weekly to the upside, you will get approximately this area. Also, I just will contract a bit chart and you see it. Also, do not forget about this ABCD pattern to the upside. That is bounce from the significant retracement. So, also chances exist that that could be just a retracement with respect of the completing point of this ABCD. Okay, and market theoretically could reestablish move to the upside. That's just about the potential upside risk. Although my thought is that I am not very believe with it that market should continue move to the upside, and mostly because of the way how market behaves in this leg. The behavior in this leg mostly suggests not the starting bounce and reestablishing the upward action, but mostly as retracement. That's why probably I will try to take the short position with the hope that market will continue to move to the downside, rather than I will trying to take the long with the potential upward action. As I said, mostly due to this behavior with this leg. We will take a look at it a bit later. The second moment on the daily time frame that could become the significant is MACD predictor. So market is approaching to it. Theoretically, it could form the bullish stop grabber here. This could happen, although this will be the weaker grabber, and it's not my preferable grabber that I would like to trade, because I mostly like to trade grabbers in the direction of the trend. So for instance, right here you have the bounce down. If market will form here the stop grabber in the direction of the previous thrust, that is much better than when you have the upward action, the crossing of the changing of the trend, and you have the grabber here from the opposite side. So that's a bit weaker pattern for me than when it stands in the direction of the previous thrust. Well, anyway, on the daily time frame chart, we do not have any clear patterns, so we just see the leg down that could be as reestablishing the downward action, as potential BC leg of the greater ABCD action based on the weekly time frame pattern. The invalidation of this pattern is right here, the low of the engulfing pattern right here. But again, as I said, I'm not very reliant, I'm not very believe is that market will continue move to this area. The reason for that is just not some kind of the sense of the feeling. This is based on the way how market behaves with this leg. Also, if you will take a look at the weekly time frame chart, I will show you. Will become a bit messy, but you will understand what I'm talking about. Just take a look at the weekly time frame chart, how it looks like. So this is too messy. Some kind of that sort. In fact, we have just will delete this MACD predictor. We have thrust down. Take a look what we have. That looks like, in fact, on the weekly time frame, it's just like look like the flag pattern. It's just some sort of the continuation, pennant or flag. It's very it's look bearish on the weekly time frame. That's the second reason why I think that the chances of to see some downward continuation is greater than some kind of the ABCD action to the upside. Also, we have this really significant plunge down, this fast acceleration. And in general, if you will take a look at the action that market is showing, move to the downside is much faster. So take a look at this one. 1, 2, 3, 4, almost 5 days, almost the week to the upside, and just 1 day to the downside. It's really much faster than move to the upside, and this tells me that probably market stands mostly in the downward direction, and that is just a retracement. That's why I am not intend to rely on this possible ABCD, but the risk exists. Still, fortunately, we have some tool that we could use here and to minimize the potential loss if market really will show some ABCD upward action. It's a bit advanced tool, and John Napoli discuss it when it has explained his trade on the S&P in the book. It's very interesting and very useful tool. Particularly here speaking about the dealing with the confluence levels, confluence resistance on the lower time frame chart, when he explain how better to move the stop order when market first time tests the confluence areas. And that's particularly the case that we will get currently. So on the 4-hour time frame chart, here's what we have. That is our upward range breakout. Market now stands at the support. Okay, trend has shifted bearish. Take a look. That is also monthly pivot support 1, weekly pivot point. And take a look, 50% support of that move up. So market at support and some bounce. It's reasonable to expect some bounce to the upside that potentially could be used for taking the short position. And here is the tool that I have just talked about on the hourly time frame chart. Here's the fib levels that we have on the hourly time frame chart. Particularly, I like this area, because this is some kind of the confluence. It's a bit wide for hourly time frame chart. 134.77, 134.93. It's a bit wide, but in general, this level includes 50% fib resistance of whole thrust down. Euro currency likes 50%, so we already know that. Take a look. That is also the 50% level of the thrusting candle that also usually works as the support resistance, and previous natural support. This could be again resistance if market will show the bounce to this area. Now, the tool that Judd Napoli discusses when he deals with the confluence suggests that based on the probability, since the confluence resistance and in general any resistance that includes different types of the levels, so we have here fib level, natural level, some kind of the level that based on the strong candles. This also could be the pivot point or something of that sort. Well, when the market first tests this level, the odds suggest that market will show the bounce, the respect of this resistance. And he tells that first, initially, the better place stop if you intend to enter short in this area, above the 618 resistance. When the market first tests this level and bounce down, we should move our stop to the break-even, because if market will pass through the confluence, it hardly will be stopped by the just single fib level. That's the thought that he explained in his example of the trade on the tick chart of the S&P when he explained how it dealt with the confluences. So if this level will hold, and it should hold, the market is really bearish, because this is really significant resistance, and there are no reasons to return right back above this 618, right back up inside of the parallel channel that has been broken, right back the flag. In this case, that will be not the truth breakout. That's why the confluence resistance strong level is absolutely suitable and reasonable retracement. So market just shows the breakout, shows small retracement, and continue move down. That's what we would like to see if market is really bearish. That's why theoretically confluence resistance should hold any retracement. And if market will pass through confluence, that will be some kind of the weakness or opposite the strength of the market. That would put under question the possible really bearishness of the market. Well, that's the major thought. And this tool could be extremely useful for us. So since we have the upside risk, as we have discussed on the daily time frame chart, that could be the really the solution for current situation. So and that tool suggests that we could, for instance, initially take the position somewhere inside of this area with a place above the 618. When market will start bounce down, we could move a step to the break-even. And if market will pass through it, we will lose nothing, and we'll just watch for what will happen next. Because if really upward action to the upside will continue, that's really very good assistance to use the confluence advantage for trying to take the short position and to minimize risk of the potential upside move if it will start. Well, conversely, if market really bearish, will complete this retracement, start move down, we will get excellent opportunity for the trading with the not really big risk. At least currently, in the current situation, I do not see any other way how we could deal with it, because no clear pattern, some precise pattern here. To take long position right here after this plunge, I also do not want to do this. Because I need for some confirmation that market really indeed will continue move to the upside before taking longs. To take the short right here is also not very good, because market now stands at the support. We need some rally to sell into. That's why I think that this opportunity could be very useful here.